Good morning and welcome, Patriot News Hour. Joe and Jason here on this Monday. I hope it finds you well out there. Did your football team give you a warm fuzzy in preseason? Yeah, it's another distraction on the way. Bo Nix, he kind of looked pretty good, but you know what? Does it really count? We'll see what happens. The Cardinals, not so good, but we didn't play anybody. We're not going to either. How about the Diamondbacks? Yeah, they're been red hot. The Olympics is over. No more weird shows and guys fighting girls and breaking. And that was quite something. Yes, the breaking. I also call, what is that? The break dancing. Yeah. Let's just say, my wife laughed all weekend about all these memes. One of the competitors from Australia, I'll just say this. I think I could do better than that. And I don't even know how to break dance. I mean, it was actually hilarious. But, you know, hey, this is supposed to be the Olympics. But, yeah, let's just say, I don't know, but I got a funny feeling breaking probably will not be back. But speaking of breaking the markets, more and more places announcing closures, bankruptcies. We had a major flooring company. They're going to close 100 stores. Denny's closing more restaurants. JCPenney's says, hey, wait, we've got to close a bunch of stores. And then early this morning, Macy's, get ready, 150 stores across the country over the next couple of years. Jason, it's kind of interesting as we're ramping up and all of the, I'll just say the consumer side of it. Everybody's announcing closures, you know, from Walgreens to CVS to Denny's, JCPenney's, Macy's, flooring companies. I mean, there's so many, I can't even keep them all straight anymore.
Well, I've noticed, my wife does the shopping, and I've noticed suddenly, and it's just been this last week, you know, I'm the one that handles, we have a joint email that we both kind of use. So basically I clean it up and do all the work on it. And suddenly I'm getting all these offers from these companies. Oh, here, I don't know why, but we're going to give you 75% off, and we're giving you 60% off on stuff that they never do, right? So, you know, huge slicing discount to try to move product that it's obvious are not moving, Joe. So it's all these retailers, you know, things that we buy. So it's like, well, okay, well, I have to take advantage of the cheaper. But there's no reason to go 75% off, Joe. That's, you know, there's no way they have that kind of margin in their products, most likely, Joe, and then they're offering these specials. And I know because I know what I paid for the item the first time and what they're offering it for this time. It is 75% off. Getting towards the end of the year, I think some of these companies are figuring out they don't want to have a whole warehouse full of stuff because then the taxes are on top of the non-sales. So it's showing a lot of stress in consumerism, Joe. Yeah, and then I don't know if we have these here, but Blink Fitness, they're one of those workout places. They've got 100 locations. I don't know if they're going to be able to stay in business. They're debating whether or not they're going to be able to, but the numbers just keep popping up, right? Friday we even talked about the eviction notices in Phoenix. Well, guess what? Denver came out with their notices, passing 9,000 filings, 32% increase in evictions compared to this time last year. Jason, I think we're really starting to see across the country, it's for real. It's for real now. There's definitely a certain percentage of what we'll call the working poor that essentially, Jason, they can't afford anything. They can't afford a car payment. They can't afford the rent, right? The credit cards are maxed out. And now here come the eviction notices. But it's not to say it's all bad, right? I mean, hey, if you're wealthy, right, you can still, definitely afford all of these higher prices out there. And now the question is going to be this week. We're going to get inflation data this week.
right, on Wednesday. We're going to get PPI, I think, on Tuesday, CPI on Wednesday. Going to be interesting to see what jobless claims looks like. I believe this week it'll be a little cleaner look. Let's not forget, we have Jackson Hole at the end of the month, and then everybody's going to be looking at that second week of September. Will the Fed or will they not cut rates? And Jason, I think the market is saying you better cut them. You got people out there, one bad day, oh my gosh, we need an emergency rate cut and all this other nonsense. But I'll say this, gold continues to lead here. Another big day here, approaching the all-time record highs. And I think that it's set up here, right? We've got a good setup for what's going to happen with gold pricing. By the way, central bank gold buying, even with China saying, hey, May and June, we didn't buy anything, wink, wink, nod, nod, still set a record for the first 6 months of the year. Just tells you how many of these countries are actively understanding, hey, all fiat money goes to zero. Do you know, Lynette Zhang was talking about, there's over 4,000 currencies that have gone to zero, or maybe it was 40,000. It was some crazy number, but they all do it, Jason.
Yeah, you leave a government in charge, and they decide to help their rich buddies out. The fiat currency will die. It can survive, but you have to have honest people in government. And
yeah.
When's the last time you had an honest government last more than a couple hundred years, Joe?
Okay. Honest government and honest economics and honest bankers. Patriot Radio News Hour, things that don't exist. 800-951-0592. Patriot Radio News Hour, Joe and Jason. 2024, the year of chaos. And, Israel now saying an attack from Iran is imminent. Get ready for that. We got Russia, Ukraine, I think trying to drag NATO into the war, going into parts of Russia now, right? The war drums continue to beat. We've got the election coming. We've got horrible auctions happening in debt levels that are just the world's never seen before. But a quick look in at the markets here. The Dow's down 40. The S&P's up 20. The NASDAQ's up 100. The 10-year note at 394. Crude oil's up $1.50. I think a lot of that probably we've got Iran. I think we may have another hurricane coming back up to $78. Gold is roaring up $25. Make it 27. Sorry, that's just that fast. 27. 24.58. Silver higher as well, up 42 cents. 27.86. And Jason, we've been telling people really for the last couple of years, because we don't know exactly when, right? When does this next bubble break? We're seeing all the signs, inverted yield curves, right? Record inverted yield curves. Now we're seeing softer and softer economic data. Is it a wonder? Is inflation coming down? Yes. Why? Because less people are working. People are broke. I told you how this was going to end. Right? Inflation will go away when everyone's out of work and can't pay their bills. Then it'll go away. Well, guess what? This is what we're approaching. You need to be the most diversified you've ever been. This appears like it will be the worst boom and bust cycle yet. Why? Why do I say that? Well, the answer is simple. Right? When you look at all the other boom and bust cycles, this inverted yield curve really is a great indicator because it's never been off. The longer it's inverted, the worse the crash, right? Think about the worst ones. Let's see. We had the financial crisis. By the way, that was only the second worst one, second longest inverted yield curve ever. The first longest was the Great Depression. So if you think about, I don't know, the last, say, 100 years, Jason, the two biggest ones, then you throw in, guess what, the other one, 87 crash, right? I mean, the inflation of the 70s, I mean, those were the worst ones. This is even longer than that. So, this is going to tell us it's going to be a rough one. I hope you take it seriously. We tell you all the time to be your own central bank. We tell you all the time, if you don't look out for your money, don't worry, because guess what? Somebody else will. And in this case, it's the government. If you want to protect your wealth, you have to have your gold and silver and lots of it. You know what? Check out our friends at YRefi. Get up to 10.25% fixed rate of return. Not correlated to the stock market. Doesn't care. Does it care about the CPI on Wednesday? Jobless claims, Jackson Hole, rate cuts, quantitative tightening, quantitative easing, twist, and all the other stuff, made-up stuff they admit. No. You can use it as income. Think about that. You can turn it on. You can turn it off. You can do whatever you want. They never attack your principal. Check them out. InvestYRefi.com. That's the word invest, the letter Y, REFY.com. Or just call them. 888-YRefi24. Jason, it's getting bigger. Chrysler announced over the weekend they're going to be closing plants. They're going to be shutting down and laying off workers. Right now, they're going to start with 2,450 workers in Michigan. We had credit and auto loan delinquencies out today. Man, it just doesn't stop here. By the way, this is out of the New York Federal Reserve, talking about over 10% now of credit card debt outstanding is 90 days or more past due. That is the second highest total ever, going back to the financial crisis. And by the way, auto loan delinquencies over 90 days past due, also surging to the second highest levels ever. So, Jason, another one of these signs, right? Think about it, right? Stellantis Jeep saying, hey, people aren't buying new car. Well, you know what? New cars are really expensive. 10%, over 10% of people with a credit card are 90 days or more delinquent. Auto loan delinquencies, the second highest on record, and now even the airlines and hotels, short-term rentals. So that's going to be your Airbnb. Theme parks. Remember, we heard from Disney. Jason, this travel trend seems to be winding down, and it's just like everything else. Everything was great. Even 4th of July. Oh, it's record travel. And now all of a sudden, they're like, where did everybody go? It's almost come to, I want to say it's at a dead halt, but a significant leg down in all of these areas, Jason.
You're saying that this summer might be the last fling for a lot of families is what I just heard. We got one more chunk of money on the credit card. Let's just get it spent because we're not going to be having another one of these for a long, long time. That's what I just heard, Joe, because, car sales, you said 90 days delinquent on loans for car sales. That just means you can't sell new cars when, 10% of all the car loans are going default. Those cars are going right back into the market. There goes your ability to sell used vehicles, right, Joe? So it's, the glut in many industries is starting to happen. And so you're right. I think everybody had their last hurrah this summer, and now the kids are going back to school, and everybody's going to try to hold on and see what happens. And here's the thing is, like, a lot of people come out of the summertime not knowing how bad it's going to be.
Yeah, airlines are saying people looking for flights fell 10% just in July. Just in July, 10%. Same thing, cruise lines, 10%. Accommodations, right, across the board. That we can't say, hey, it's collapsing yet. It's only, right, we've only got a month's worth of data. But these are significant. And obviously, I get it. Some of it, it's the end of summer. But we have the end of summer every year, right? Back to school comes every year. This is a big change in what we've been seeing from the consumer. And then, of course, like I said, we've got CPI coming this week right now. Here's what they're looking for. Headline and core CPI to be up 0.2% month on month, which would leave the annual headline CPI rate steady at 3%, with the core going down to 3.2%. So if we get that or less, right, everybody's going to be screaming for rate cuts. I think it's part of the reason why you're seeing gold now $2,460. I think TV gold now back to $2,500. Jason, everybody's kind of anticipating, hey, whether or not the rate cut comes and how big of a rate cut is it going to be, the American economy seems like it's joining all the other economies of the world, where not only is it slowing, but the debt levels continue to skyrocket. And again, I'll just say this. The more people that get laid off, the more people that can't find work, the bigger the deficit gets, because all of a sudden these people aren't paying FICA tax. They're not paying it, right? So it's going to be interesting how the rest of this year shakes out. But this is a big week. I think this week, if the inflation data is favorable, which when I look at gasoline, because you got to remember, just what was it, 2 weeks ago? What did it get? Did crude oil get into the 60s? Maybe it got into the 60s, low 70s. I think we're going to see a favorable inflation number, Jason, and I think we could see record high gold prices off of that number, especially if it comes in below this. If we get a headline number in the twos, if we get a core number, say 3% or less, look out.
Right, you just covered a lot of ground there. I'll go back slightly where you were saying, a little bit ago, 2,400 jobs from one company. And a lot of people listening probably think, well, that's not that big of a deal. It has a huge impact, and let me double that up, because Joe was talking about the '87 crash and the .com crash, and the crash during COVID. Well, during the '08 crash, mortgage-backed securities. It was basically said when these guys, The Big Short. If you haven't watched The Big Short, go watch the movie. But if mortgage-backed securities had an 8% default, just 8, it was like the end of economic civilization. And the guys in The Big Short, they didn't even catch it until it was at 4%. When they started actually placing their bets and trying to make money off of the destruction of the mortgage-backed securities market, it was already at 4%, so they had a sure bet in their minds. So, Joe, 8%. 8%. So when you talk about these other default rates and these things going on, what happens if unemployment was 8% right now, Joe? What would happen at 8% unemployment? What would be happening at that point?
Man, it'd be horrific. I mean, 8% unemployment would just be absolutely devastating. All of a sudden now the Dow's down 200 points, the S&P's gone negative, even the NASDAQ getting ready to head negative. I'm trying to see if there's a reason for that. I don't see it yet. I know Starbucks saying that sales at Starbucks really starting to fall. Matter of fact, big meeting with the largest shareholders at Starbucks to try to figure. I got to tell you right now, I don't know how much a Starbucks costs, but it costs too much, right? I mean, Jason, it's just that simple, right? You can't go out and spend $10 on a cup of coffee anymore.
I wonder how much room Starbucks has to lower prices before they have to start shutting down tons of their stores, right, Joe? I mean, it just seems like lowering the prices would be, because they got it. It's coffee. I know there's coffee, it's sugar, water. It seems like there's room there, but I mean, they have some fancy stores, I guess, right, Joe? They got rent to pay. I guess if people aren't going to buy their $10 coffees, maybe they don't have a lot of room to go down to a $7 coffee or a $4 coffee, Joe. I guess Starbucks might be in some trouble. I don't know their business model, but it seems to me there's got to be some room there.
That's a great question. McDonald's saying, here's some good news. They're going to extend this $5 deal. They're saying sales continue to fall at their restaurants across the country. So now, even McDonald's, who said, listen, we can't make any money on this $5 deal, they're like, you know what? Yeah, if we get rid of the $5 deal, how bad would sales be, right, Jason? It may be the only thing really keeping some of these places going.
Yeah, McDonald's is one of those that's probably geared for the downward cycle we're heading for. Unfortunately, the Walmarts and the McDonald's of the world, that's what they bought the biggest share of the market when they like it when things crash because they get to do what the bankers do. When all the small banks, we have 1,000 small banks close down, the big banks swallow them whole. The Fed swallows them whole. McDonald's and Walmart, same thing, right, Joe? They just swallow up all the small fish that just can't handle it. So I guess Starbucks maybe is there, I guess. Maybe,
right? Yeah, we'll see. I know, right? And it's only Monday. 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. We got gold up like $30 right now. 2,460 and change. Silver is now up 35 cents, 28.80. The Dow down almost 200 points right now. The S&P's gone negative. The NASDAQ is only up 20. But Jason, Friday we ran a special on $10 Liberties for $1,335. Gold's up. No, it was on sale. Gold's up 30, add another $15. Right now a $10 Liberty should be about $1,360. I've got 50 of them. There was a big show in New York that was going on last week into the weekend. So we were able to get some more of them. So here's what I'm going to do today. I'm going to ignore everything. $1,335 was the price on Friday. $1,335 is the price today. And I think with it, my guess is, and I don't know what just happened, but is Iran getting ready to strike? Jason, we had heard too, when this whole thing happened, that it was going to be the 12th or the 13th, that there was going to be a major retaliation. We'll see what that is. If that comes on top of PPI, CPI, jobless claims, this is a week that you could see some very big moves depending on how some of this shakes up. I know Hezbollah launched an attack yesterday, and I don't know if the dome system that Israel has malfunctioned or what, but a lot of them got in. We'll have to see what happens, but $10 Liberty today. This is a outright steal. $1,335. I only have 50 of them. That is it. I don't have any more. No limit here. If someone calls up, buys the 50, buys the 50. It is what it is. 800-951-0592. And news over the weekend about how many central banks now are officially reporting increasing their gold holdings. It almost rises on a monthly basis. Yes, China gets the headlines, but Jason, it just continues to grow here. And the amount of countries just in the last 90 days that have repatriated gold that had been in the United States or been in London. And listen, they've been there They've had gold there for decades. Almost a dozen countries just in the last 90 days have said, you know what? Nah. We see what you do. We don't like it. You're seizing people's assets. We'll just hold our own gold. And I think that's a very clear indication of how this world is getting ready to change. It sure feels like, I'll tell you right now, these countries feel like it's changing. That's for sure, Jason.
Yeah, and things do seem to have a feeling that there are some changes going on, especially geopolitically, as you've been talking about. So, the Middle East can be a lot slippier when it comes to economics than we realize, Joe. If countries are suddenly deciding to be a little less loyal to each other, so to speak, which is what gathering up your gold shows, things can get pretty wild right now. It is an interesting thing if there's going to be an Iran counterattack Monday, today, or tomorrow. Then we have inflation numbers, and the Fed could always do an emergency rate reduction if they get enough bad news on the markets. That can always be the emergency ones. I think the Fed really wants to lower rates, and I tell you the truth. I think lowering the rates once or twice it's just an indication. It's a message to all the rich buddies. This is the moment. Time to get fortified, because I fully expect rates to be higher sometime next year, whether it be middle or late next year. You're going to see the rates bounce and go up in a major way. And then what's going to happen, Joe? Because obviously if they raise the rates, it's because inflation comes back. And we'll have to wait and see, Joe. And that's a lot of doom and gloom that's getting ready to happen in the next year.
Yeah, and looking at debt levels, J.P. Morgan, Jamie Dimon, one of his biggest fears is just that, and I think we're at this point where, let's face it, let's call it what it was. It was a great couple of years, right? COVID lockdowns happened. Government paid everybody a ton of money, gave the states a ton of money, cities tons of money. They just shelled it out. And then what did they do? They just kept spending at the same level. But COVID was over. That's okay. But even that wasn't enough. And now they're all broke again, right? We're seeing all these reports about cities and states and all the trouble they're having. But if we really do get into a major slowdown, the problem really intensifies, because as we talked about earlier, okay, that means Social Security, Medicare, Medicaid, which they don't have any money. We don't even bring in enough. Starts to get worse, right? That just gets added onto the debt, right? All these people, unemployment, and all these other things get added on. But Jason, what has always been government's response to this? Every time. Oh, we got to come up with some kind of package, right? We got to spend $1 trillion to try to get the economy going again. And that's where Jamie Dimon says, get ready. Interest rates may be significantly higher no matter what the Fed does, right? And we see it at these auctions time and again. I mean, last week, it happened twice. Last week, where we had some very bad auctions, right? What does that mean? Well, we had to pay more than we wanted to sell the debt, and less people continue to show up, Jason. Yeah,
that's something that probably should mention more often, is that the Fed doesn't necessarily have all the power on where the rates should be. They just are the biggest loaner, right? They have the biggest printing press, right? So they have a lot of influence on those rates. But if people don't want to come to the Fed for those loans, those interest rates can go wherever they want, right, Joe? The interest rates can go outside the Fed. It doesn't have to be where the Fed is. I mean, when the USSR imploded in the early 90s, they had overnight rate hikes of, I think one time Russia did 7% in one day because they had to stop the inflation that was going to eat Russia alive. And there's no central bank that's going to be able to stop that if things get that bad, Joe.
I want to just say this. When we get back, I think we're going to see this early in 2025. I'll tell you what it is. $10 Liberties, get them. $1,335 at 800-951-0592. Jason and I, we're going to be right back. 800-951-0592. Here we go. Here's how it begins. Bank of America CEO Brian Moynihan. If the feds don't cut rates soon, the American consumer will become very dispirited. Yes, see? If you don't cut them, right, that's it. You're going to cause a bad outcome. So the pressure's starting to build. Here's what I see. We're heading into recession. It's not going to be a soft landing. I think we're going to see the Fed cut rates in September, as I said. They're going to hold off. This is my opinion. They're going to hold off until after the election and then cut again in December. If they listen, I think that is baked into the cake. If they're actually forced to cut rates after this September meeting and before December's, oh boy, right? That's where you start looking at $3,000 gold by the end of the year instead of $2,700. But here's what I see coming after the election. I see another big increase in government spending. Why? Well, because the economy, people being laid off, people getting fired, people out of money. I think we're going to see a huge wave of closures after Christmas disappoints and so on and so forth. I also expect quantitative easing to make a comeback in a big way, because there's no way the central bank is going to allow for real price discovery when it comes to interest rates. And they are going to start buying treasuries again. I expect their balance sheet to be over $10 trillion, on its way to $20 trillion on this scheme as they try to rein in rates. I think we're going to be talking about all-time record high budget deficits. And Jason, unfortunately, the problem is it's not going to be enough. And then where do you go from there? That's the big problem, right? Because that's the trick that's worked, right, since since the turn of the millennial here. But the amount of debt is so overwhelming now. I mean, interest on the debt already this year will be the third largest expenditure in the government. It's already past defense spending. Next year, it's anticipated to be the second largest. It really would be the first, because if they didn't combine Medicare and Medicaid, next year, interest on the debt will be the single biggest. It'll be bigger than Social Security. If you can leave Medicare and Medicare combined, it probably won't take that out till 2026. The problem then, though, come 2027, Medicare and Medicaid are going to need more money. And all of a sudden, Jason, we get another stair step up in debt. And this is why I'm telling, this is why everyone's getting into the gold markets. This is why they're taking their gold home. This is why the war drums are beating. But this is a storm that I see, unfortunately. I think that's the likely scenario. This isn't the, well, here's the base, how they do it. Well, this is our base scenario. This is our next worst scenario. And then this one big outlier scenario way over here. No, I think the outlier scenario is the scenario, Jason.
Yes, I mean, I've said it many times. This is the best way to look at it. They're going to attempt to inflate their way out of this thing. That's the only direction they have. And if you look at World War II, which the debt to GDP is similar to where it is now, you ended up with the Korean War. You ended up with the Vietnam War. You ended up with the 1980s, where you had the CIA doing all of these covert wars in Middle and Central American and South American countries, Middle Eastern countries. Then you had the Iraq War. Then you had the war in Kosovo, and it just goes on and on and on. And that's the way you sort of deflate the inflation that's happening. Why didn't we have rampant, out of control inflation after World War II? Well, the way that you stop from drowning in a lake is you just have something sort of sucking the water out of the lake just so you can keep your head above water, right? War is the perfect way to just suck value out of the market while you're inflating. And, Joe, I don't see anything but forever wars from here on out. There's going to be a war or some covert version of a war that's going to suck money out of the American economy as they inflate. People are... When I talk about the dark ages and the you can have peasants and lords and no middle class, we are completely headed that way, Joe. The standard of living is going to crash and burn in the next decade. People are going to be shocked, Joe. People that feel like they're comfortable and they're isolated from this are going to lose it all. The thing about the Depression that people don't really talk about too much is it wasn't just a bunch of people starving to death and it was just bad times. They bankrupted more rich people in a short amount of time than any other time in American history. A lot of wealthy, well-to-do people ended up with nothing. I mean, Joe, if you're one of those wealthy guys that think you have your act together and you have no gold, you could likely lose it all. It's absolutely, if somebody else is holding your assets, you don't really hold them. You got to hold some of your assets. If you're a super rich guy right now and you're kind of laughing at us, you're the other side of the political track, so to speak, you might want to put yourself in a big, huge pot of gold because having it all in the markets is not a safe place, Joe.
I'm going to tell you right now, diversification is going to be the key. Those that diversify the best are going to be the ones that can take advantage. Because the good news is, after the crash, there's going to be opportunity. There is going to be opportunity, but you got to have some money to be able to take advantage of those opportunities. $10 Liberties, $13.35 at 800-951-05. 800-951-0592. Joe and Jason, Patriot Radio News Hour, L&L Flooring. They're huge. They just announced they're shutting 94 locations. And then Macy's, big news out of Macy's today saying that they're going to be closing 150 of their stores over the next several years. That's a lot of square footage, right? This square footage seemingly continuing to pile up here. It's funny. The problem was office, right? Commercial office space was the problem. Now, all of a sudden, Jason, is this going to spread into other commercial areas? It's starting to look that way because, I mean, I don't know. I don't think a day goes by now where somebody else doesn't file bankruptcy, and it's the amount. Right? Like JCPenney's wasn't that bad. I think they said, well, hey, we're going to close 5 or 6 more stores. Of course, the problem is, another 90 days, we're going to close 10, right? They're just doing it in drips and drabs. But we're seeing these companies, hundreds and hundreds of stores, from CVS to Walgreens to Big Lots, LL Furniture, Macy's. I mean, it's a lot all at once.
And it's definitely not growth, is it, Joe? It's not growth.
Doesn't feel like growth to me.
It's what a recession is there's less, right? Depression, there's less. That's what that is. So that's, I can't remember the last time. It's been a while since we talked about growth, Joe. It's been a while. It's been a while since we talked about except for the largest of the largest companies, there hasn't been a lot of growth.
800-951-0592. And just, I know, right? You're like, gosh, Joe, gold's up 28.5% in a year. It's hard to imagine. Gold wasn't even $2,000 this time last year. And I'm telling you, get ready for the next leg up. Because here comes the printing press. This is what's coming. This is what these clowns do. They don't understand. Well, they do understand. That's the problem. They understand perfectly well because they know, hey, we're going to wipe them out and then tell them the digital currency is going to be the answer, and understand what that really means. And I know, right? Well, they can ban you from buying this and ban you from buying that, restrict how much of this you can buy and restrict how much of that you can buy. But I'm going to tell you what ultimately it's coming. The tax ban is coming. All of this debt has to be paid for. And it's you and I that they're going to get it from. And they won't. I see waves, fees for everything coming with the digital currency near you. 800-951-0592. I keep telling you, be your own central bank here. Have your gold. Know where it is. Be diversified. Check out YRefi. $10 liberties. $1,335 at 800-951-0592. And Jason will watch. Are we going to see $2,500 gold fall this week? We'll have to wait and see. I think a lot of that will hinge on what we see Wednesday from the inflation numbers.
We shall see, Joe. You know, there is one growth industry I was thinking about while you were talking. The IRS, they're still adding to that 87,000 new agents. Kind of tells you what they want, right?
Yeah. Tax ban's coming. Patriot Radio News Hour. Jason and I, we're going to come right back with the half empty.